A punishing trade war has begun between the United States and three of its largest trading partners. Tariffs on Mexico, Canada, and China took effect Tuesday midnight, drawing immediate retaliation from these nations. Mexican and Canadian imports are hit with a 25% tariff, while duties on Chinese goods doubled to 20% from the initial 10% last month. In his address to Congress hours after triggering the trade war, American President Donald Trump offered different reasons why he pushed through with the tariffs. First, the U.S. has trade deficits with Mexico and Canada. Second, both countries failed to curb the flow of fentanyl into the U.S., while Canada struck back by plastering tariffs on $100 million worth of U.S. goods over 3 weeks. China imposed tariffs on various U.S. food products ranging from 10 to 25%. Mexico will announce its own retaliatory tariffs this Sunday. Canadian Prime Minister Justin Trudeau offered some of the harshest critique yet against Trump days before he steps down from office.
The United States launched a trade war against Canada, their closest partner and ally, their closest friend. At the same time, they're talking about working positively with Russia, appeasing Vladimir Putin, a lying, murderous dictator. Make that make sense. Now, it's not in my habit to agree with the Wall Street Journal, but Donald, they point out that even though you're a very smart guy, this is a very dumb thing to do. We two friends fighting is exactly what our opponents around the world want to see.
Trump also doubled down on his tariff threats in his speech before Washington lawmakers, claiming the world has been unfair to the U.S. Reciprocal tariffs will kick off April 2nd on countries that charge duties on America.
Other countries have used tariffs against us for decades, and now it's our turn to start using them against those other countries. This is happening by friend and foe. This system is not fair to the United States and never was. April 2nd, reciprocal tariffs kick in, and whatever they tariff us, other countries, we will tariff them. That's reciprocal, back and forth. Whatever they tax us, we will tax them.
All right, that was, yeah. We will tariff.
Is tariff a verb?
It is now, in Congress no less. So as we were saying, this is the first time that Trump is facing the U.S. Congress after his triumphant comeback to the White House. And then this happened.
Members are engaging in willful and continuing breach of decorum, and the chair is prepared to direct the Sergeant-at-Arms to restore order to the joint session.
Opposition Democrats staged protests during Trump's speech by raising signs that read, quote, "False and save Medicaid." Another representative also held up a sign that read, "This is not normal." Also, in the first few minutes of that event, a Texas Democrat interrupted by shouting that Trump has no mandate cutting safety net programs. He was escorted out of the chamber. Tasked to deliver the Democrats' rebuttal, Senator Elissa Slotkin of Michigan warns of rising costs and chaotic change under the second Trump administration.
America wants change, but there's a responsible way to make change and a reckless way. And we can make that change without forgetting who we are as a country and as a democracy. Grocery and home prices are going up, not down, and he hasn't laid out a credible plan to deal with either of those. His tariffs on allies like Canada will raise prices on energy, lumber, and cars, and start a trade war that will hurt manufacturing and farmers.
Will the Philippines be affected or spared by Trump's wave of tariffs? To talk about tariffs, inflation, and more, we're joined via Zoom by Jonathan Ravelas, financial strategist and senior advisor at Reyes, Takandong and Company. Good evening, Jonathan. Good to see you again.
Good evening, ladies. Exciting times.
Yeah, indeed.
Oh, well, I don't know. Will it reverberate to the Philippines, the tariff war or the trade war?
Well, basically, I guess it's going to be more of a, what we will probably have is more of the secondary effects to the tariff. Mainly because if, again, as Trump would say it, if they put tariff, there's a reciprocal tariff. So most likely the impact will most likely be for other countries to offset. And a good example is China. The first time Trump said that they'll go through with the 20% in China, we saw the Chinese yuan depreciate by 0.3%. So that is a typical reaction of countries that would want to ensure that they can try to cheapen their goods by slowly depreciating the currency. And looking at the Philippines being a net importing country, especially for food, then we could get affected with the weaker peso.
But the U.S. also has a trade deficit with the Philippines, at least in 2024. So
Yes.
the way President Trump is arguing his move, he will do this with countries where U.S. has a deficit, trade deficit. So
Yeah, so that's why it's more of secondary to us. So basically, it's the after effect. So I think when it comes to the Philippines, we're really more of a domestic-driven economy. So it's the secondary effect that actually hurts us, especially when you import food. So which is one of the key issues that could affect inflation.
So always, no, we always have this saying, when the United States sneezes, the whole world catches a cold. So that's kind of, I guess, what you're trying to say. But good that you mentioned inflation, Jonas, because as usual, it is an inflation day today. And as usual, we called on you for some insights. 2.1% in February, that was lower than the BSP target. I think it was also lower than your own forecast, right? Tell us what's in between the lines of the PSA's press release today.
Okay, I think one of the things is that I was actually looking at 2.9%. I feel that the impact of the prices, but what actually really brought it down is that we saw a negative 4.9% drop in rice prices. So this was actually very significant, and probably compared to a year ago, which we saw an increase of over 23%. So this is one of the major things. So rice, which accounts for a bigger portion of our basket, as compared to probably the four other items like fish, meat, and vegetables. Basically, these are the ones that have still encountered some increases. So from a low of 2.9% all the way to a high of 8.8% for meats. So hopefully by at least maybe until the second quarter, we could see the impact of a potential high base. So meaning there were higher prices in 2024. So we could probably see inflation probably averaging the first half closer to around 2.8%. So this actually gives the idea or the potential that the BSP could really cut policy rates by 50 basis points. Thanks to the oil prices, the peso has appreciated to around 57.30. So this is actually a good opportunity to be able to cut policy rates so that it could help the economy sustain growth, especially now that we're starting to see the impact of this drop in rice prices. This could eventually unlock consumers' spending, meaning they can shift to other potential spending, whether it's food or other discretionary items.
The next question, if I may
Okay.
follow up quickly, Sas, no? The next question there is this sustainable? What the government did, they amended the rice tarification law. They did cut tariffs from 35% to 15%. Do you think that's just coming to effect now, or is this sustainable in the long run?
And I don't know if you can also, in your answer, input the possible inflation effect on inflation of the increased tariffs that the U.S. is imposing.
So most likely, is it sustainable? The question, the answer is no. If the trade war heats up, then definitely there could be what people will call uh, a competition among other currencies. So there could be a currency war as well, meaning most of the countries will want to continue to be selling to the US, which is still the biggest economy. They'll try to cheapen their currency. So in effect, that will mean a stronger dollar.
That's bad
Okay?
for us.
So
Bad for us.
the other thing is Trump also wanted lower fuel prices, and this is eventually happening now. And lower oil prices is actually good for us. This is positive for the Philippines. So it affects from transportation all the way to uh, importation of food because we eventually try it's part of it. So probably until the first half, I think it's still manageable. But if the escalation happens, the impact really is the secondary effect, meaning the peso will depreciate. And this is eventually very similar. We don't have to think if this is not going to happen. We saw this in 2017 when inflation at that time in 2016 was averaging 1.25, and in 2017 it became 2.85%, and eventually peaking in 2018 at 5.3%, while the peso depreciated from 47.72 all the way to around 52.58 in 2018. So this was the time when the Philippines went on triple B, build, 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 which affected our trade deficit because we were importing so much. Now, we're also doing the same for infrastructure spending, but we're also importing a lot of food. So that's the problem.
Well, Jonathan, given this trade war, I'm curious, which industries do you think will suffer or could also benefit from everything that's happening?
Okay, I think most likely those that will get affected are those with a lot of dollar loans. So companies that have dollar exposure will greatly be affected. However, since we're continuing infrastructure program, this is actually positive for the likes of one, tourism. Weaker peso is good for tourism. So it will also be good as we do infrastructure spending. It's still good for real estate. So you can talk about hotels. At the same time, expansion plans will eventually attract manufacturing. So those are sectors that could benefit if we continue to do well. And I hope what happened to the bridge in Isabela is not, it's just a fluke. There will be no fears about substandard infrastructures. So, but if we're able to do it right, along with the impact of the IRR, the implementing rules and guideline of Create More, and the ease of doing business, should be able to attract those foreign direct investments when the peso is weaker.
Okay, Jonas, you mentioned the triple R. That was actually going to be my next question to you. Recently, the BSP cut the triple R. This is the reserve requirement ratios for banks. This is what makes our banks super healthy, even too healthy, some economists may argue. But now it's down to 5%. You know, I remember not too long ago, maybe less than 10 years ago, it was at 20%. This much liquidity being released so fast into the market, are you seeing that being inflationary as well?
Well, basically, I guess you need to understand that our economy now, compared to probably in the 1990s, where the triple R was at 25%. So that's the time I started working. So at 25%, meaning that's 25 centavos out of 1 peso that's being placed in the central bank. And at that time, most of our loans were basically more tilted to foreign, around 40%. So now that we're on the other side, 80% of our loans are domestic, meaning on the part of government. So there's a need for that liquidity. So since by the end of the month, we'll have around 300 billion worth of additional liquidity, this will eventually help support the business. So those that will need to continue to expand. And
It should
this is
spur
something that
economic activity.
could help.
It should spur economic activity.
Yes.
Along with that rate cut. So now that you said that the BSP cut is looking to be more possible, around when would be the next question to that?
It should have been done last December. If you recall my interview, I was actually looking at 50. I believe that they should have done it at that time, but I would expect that they'll probably do it as early as April.
Okay, now this might be, again, just for everyone to know that this might be a little bit alarmist, but we just wanted to know, just because basing off of Trump's speech in front of the U.S. Congress, joint houses, he mentioned, killing the Chips and Science Act of 2022, which was passed under the last administration, under Joe Biden. If it comes to pass, big if, how will this impact us? Because that is like a huge subsidy as well. And semiconductors are our top exports.
Yeah, so that's going to be a challenge, no? Of course, especially now that recently the biggest chip company maker in Taiwan has already invested in the U.S. So these are a few things that, again, when we start thinking about the Philippines, how do we address ourselves as a country when it comes to the tariff war or the trade war? So when we talk about exports, the first thing that we need to do is to look at other markets where we feel that we could excel in, or we could be the preferred. So that is actually one way of trying to combat the negative effects. If we talk about, because we're importing, we might want to look at other countries where we import our needs. Like a good example, pork. We import pork from Argentina and Brazil. Although we are also importing from the likes of Germany. So when we talk about exports, which are like humans, in terms of OFWs, which there are a lot of risk for Asia and the ASEAN because of competition, we might look at other markets like the Eurozone as potential areas where we can send our OFWs.
Okay,
so
go ahead, Jonathan.
Yeah, so these are, I think we have to start looking at trade alternatives other than just, focusing on just one market. We have to broaden our horizon. Now, the other thing is start looking internally where we are going to be able to get our raw materials. So if we're able to do that, then we can more or less, lessen the impact of the tariff wars.
Well, speaking of the tariff wars, Jonathan, I wanted to get your thoughts if all this makes any sense to you from your perspective, everything that Trump has been saying. I mean, he did say that all these tariffs are aimed at making America rich again, and he believes that the implications will be minimal in terms of their economy. I mean, you as a financial strategist, does that make any sense?
No, well, basically it makes sense. You have to understand that they're cutting costs in government. So that should lessen the cost of doing business for the government. So imagine that right now, for the U.S. to come up with $1, they need to borrow $3 just to produce that $1 because they have high expenses. And what is he doing the past few days? He's been trying to cut all the aid. He's been cutting all of the expenses. So if you're looking at it from a personal side of things, you're cutting your personal expenses to a minimum. So that is good for your budget deficit. If I'm increasing my tariff, that is revenue for the U.S. So that is actually good. So that makes the dollar stronger. So this is eventually what he's planning to do. And while other countries try to do reciprocal tariffs, that sooner or later they'll have to devalue their currency because other countries will use the cheapest way to increase their volumes, meaning it's now going to be a dog eat dog. If I don't devalue, then I'll lose business.
So
on the weaker peso
On the other
probably be
side
there.
of the coin, Jonathan, there are warnings that this may result in a recession. Is that too alarmist a view?
Not necessarily. I think it will depend on how bad the trade war will be. But for now, it will continue to show the strength of the U.S. economy probably until the first half. Then we'll see what happens after in the second half. So I think that's where most of the forecast of a weaker peso and eventually the base effects of high base inflation could probably wear off.
Okay, last quick question, just to bring it back here to the Philippines and our better than expected inflation for February. That already counted sort of a few days of the start of election period. Election period equals big campaign spending. Later on this month, the local campaigns will kick off as well. Jonas, are you seeing some inflationary flags with the election campaign, which is actually a usual thing naman?
No, I don't see the election spending to be as big because remember, this is just a midterm election. This is not a presidential election. But the tailwinds of this election should help support the growth that the government is trying to look at, which is around close to 6%. This year, I'm actually looking at 5.8% as a target. No, this could probably be the third year that we will probably miss the 6%. Again, the challenges are more external rather than internal.